Neil, have you ever noticed that the stock report is on the news every single night, Monday through Friday, probably worldwide?
Yeah.
And on the radio throughout the day?
Yes.
Have you ever wondered why? What's the big deal?
I never even check the news. I never even check that because every day it will show that it's going up, it's gone down, it's going up, it's going down, but I never check what is that for.
Yeah. Well, I'm going to try to answer those questions as well as other questions as we cover the stock market basics. Are you ready?
I'm very ready.
All right. So if someone were to ask you, Neil, what is the stock market or what's a good definition for it? What would you say?
I'll say that a stock market is where you invest part of your money so that you can have part of the ownership to the company.
Yeah.
I think that's what I'll say.
Yeah, that's great. Basically, stock market is two words, stock and market. And what's a market? A place where you go to exchange money for goods. So when you go to the supermarket, you're going to the supermarket, you're going to a place to exchange your money for groceries. Or if you go to the flea market, you're going to a place to exchange your money for arts and crafts, antiques, clothing, and so forth. And when you go to the online market, you're going to a place where you're going to exchange your money for all sorts of products. So the stock market is a place where you go to exchange your money to buy stocks. And what's a stock? Another name for stock is share. It's a part of a company. It's to have part ownership of a company. So stock market is a place where you go to exchange your money to buy bits of companies. Does that make sense?
Yes.
On the flip side, a company that gives up ownership to receive money from the public is called publicly traded. Now, why would a company do that? Chances are because it's doing something a little too risky for the banks to receive a loan for the bank. A good example might be, let's say a company wants to build a brand new factory, state-of-the-art factory, and they say this state-of-the-art factory is going to cost us $200 million, but we feel it's going to bring in $400 million or $500 million of profits in the future. And they might present that to the bank. The bank might say, well, that's too risky for us. The market might change. We're not going to invest $200 for you. So that company will go to the public and say, hey, we got this state-of-the-art factory that's planned up and we're going to bring in a lot of profit. Would you like a share of that profit? And there might be people out there who do that.
Yeah.
A great example is the Dutch East India Trading Company. Have you ever heard of that company? It's from the 1600s. It's, according to the historical record, it's the very first company to become publicly traded. See, they had a fleet of ships that would go to East India to pick up textiles, silk, porcelain, gold, spices, whatever, and bring them back to Europe to sell them. Well, having a fleet of ships going out in the treacherous ocean is a risky business, and chances are they probably couldn't find a bank to help finance more ships and so forth. So they went to the public. They literally went into coffee houses, the ports, and presented their business option to people and say, hey, would you like to invest in our ships and we'll give you a portion of the profits? And a lot of people said yes. And that, according to the historical record, is the very first publicly traded company, and in Amsterdam became the very first stock exchange in the world. Now here we are 400 years later. Instead of one company that's publicly traded, we have 42,000 companies that are publicly traded, and they're across 60 different stock exchanges throughout the world, and their net value or their market value is $80 trillion.
Wow.
So why is the stock market a big deal? Why is it on the news every single night? $80 trillion. If you're worth $80 trillion, you're going to probably be on the news every single day and throughout the day and so forth. So it really is a big business. And also those 42,000 companies are a good barometer for the economy for the rest of the world. So if those 42,000 companies are doing well, chances are the rest of the world is doing well. If those 42,000 companies are doing poorly, chances are the rest of the world is doing poorly as well. That kind of makes sense?
Yes.
All right.
Yeah.
I mentioned there are 60 stock exchanges throughout the world. Where do you think the closest stock exchange is from us right now?
So, Cabroni.
Very good.
Yeah.
Botswana has its own stock exchange, okay? And what do you think the largest stock exchange is of those 60 stock exchanges?
The largest stock, I don't know.
Do you think it's in Europe, America?
I'll say America.
Yeah, it's the New York Stock Exchange.
Yeah, I'll say America.
By far the largest stock exchange in the world. And there's a huge stock exchange in London, a huge stock exchange in Tokyo, but the largest is in America. Okay. Now, Have you noticed that? I noticed this when I lived in the city of Los Angeles. I would drive in rush hour traffic, and I would hear stock exchange updates every single hour. Now, do you think they can track all 42,000 in every single hour and tell you exactly how those 42,000
I
are
don't
doing?
think so.
No. Now, maybe they can now, but definitely in the past they could not do so. So they would come out with something called an index, a stock index. Have you ever heard that word before?
I want to see that word, but I never really paid attention.
Yeah. The stock index is basically a small subset of companies that are highly correlated with that stock exchange. So if you it's a lot easier to follow a few companies, and then you kind of have a good barometer with what the rest of the companies are doing. So if you have a subset of companies, it's a lot easier to follow that subset of companies than it is 42,000 other companies, 42,000 companies. And so you can pretty much say, okay, when the market is doing this, then you could say, well, the market's up 35 points because this small subset of companies is up 35 points, and chances are that's going to correlate to the rest of the world, okay? Now, the number one stock exchange index is called the Dow Jones Industrial Average. Have you ever heard of that?
No.
Okay. Well, that's the one you see when they tell you the market's up 30 points. They're talking about the Dow Jones Industrial Average. And it's from 1896. It's from Mr. Dow and Mr. Jones. And they came out with 12 companies represented as a subset of the companies representing the New York Stock Exchange. And those 12 companies were massive companies in America, and they followed those 12 companies. One of those companies was a company called American Cotton Oil. Another one was called American Sugar. Another one was called Chicago Gas. Those companies are not existent anymore. They went out of business or got bought up or whatever. But one of those companies of those 12 was General Electric. And that company is still around right now. Now, today, that group of 12 companies is now 30 companies. So the Dow Jones Industrial Average is made up of 30 huge companies in America that are all on the New York Stock Exchange. Now, you've lived in America for 4 years. Do you have any idea, if someone were to say, give me a couple of those companies, what would you say off the top of your head? Now, this is not rehearsed, so I'm curious to see what she would say. What do you think? Think of America when you lived in America. What are some huge companies that you came in contact with?
I came up with Apple.
Very good.
Apple is huge.
Apple is on one of the 30.
I don't know about Microsoft.
Very good.
Would it be
Microsoft is on that list.
Yeah. What else? Those are the ones that come to my mind.
Walmart.
Walmart. Oh yeah, Walmart.
Coca-Cola.
Why did I forget Coca-Cola?
McDonald's.
Oh yeah.
I'm not sure if you're familiar with Chevron Oil.
Oh yeah, Chevron. Yeah.
So those are just a few of the companies that are part of the 30. Okay. Now let's take a look at the Dow Jones Industrial Average. I'm going to bring it up on the computer. So how do you see the Dow Jones Industrial Average? Well, I just went to Google and typed DJIA chart, and this is what it brought up. So this is what happened to the New York Stock Exchange, to the 30 companies on the New York Stock Exchange representing the Dow Jones last Friday, last trading day. So the number is now 30,932.37. It dropped 469 points on last Friday, which is 1.5%, which is a fairly significant drop, and there's a reason for that. And so basically it started out in the morning at 31,400 and ended up at 30,932 right here. And this is what happened throughout the day. So you can see it took a dip right around 10:30 a.m., went up a little bit, but then ended up closing at 2 o'clock in the afternoon. So this is the chart. This is the index of the Dow Jones from last Friday. Now, I'm looking at a 1 day, but you can look at for 5 days, a month, 6 months, and year to date and year. I'm going to look at year. So this is the Dow Jones for the last year. So on the x-axis here, I lost my curve. Oh, here we go. On the x-axis here is for the year. So here we are on the far right. We're around March 2021. So back in March 2020, it was right around 26,000 or so. And notice it went down. what happened last year about this time that would cause the market to go down?
Coronavirus.
That's when the lockdowns happen. Okay. So now notice this is a downtrend. Notice it goes up and down a little bit, but the overall trend is down. That's called a bear market. Bear is B-E-A-R, like the animal bear.
Mm-hmm.
And then from that point on, there you have an uptrend for the rest of the year, up like this, up to where we are today. That's called a bull market. Have you ever heard those terms before? Bear market, bull market?
No.
No, okay. Well, the reason, basically a downward trend in a stock price or downward trend in an index is called a bear market, because when a bear fights or when it attacks its prey, it fights downward, it sweeps downward. And then a bull, when it defends itself or when it attacks someone, you kind of notice it gets real low, and then it lifts its horns up and it goes upward. It fights upward. So that's why it's called the bull market. So those are some basic, terminology. And you can also experiment with this. You can go to a 5-day look, a month look, 5 years, and so forth. So basically, the stock market for the Dow Jones has kind of, on the average, increased about 13% a year ever since back to 1896. So overall, it's done quite well. In the general trend. But you will encounter bulls and bears throughout the time. There are times where it drops significantly, and we saw a significant drop a year ago. And I just mentioned, just in the last day, it dropped 1.5%. So those are some stock market basics. What's the definition of the stock market? A place where you go to exchange your money to buy bits of companies. How many companies are there out there? There's 42,000 publicly traded companies across 60 different stock exchanges, and the largest is the New York Stock Exchange. So when the news tells you that the market is up 20 points or is down 100 points, what are they talking about? They're talking about an index. The most popular index is the Dow Jones Industrial Average, which is an index or subset of 30 companies, 30 massive companies on the New York Stock Exchange. And what's interesting is when you track that chart for the Dow Jones Industrial, it's highly correlated with what's going on in Tokyo, London, and so forth. So when the 30 large companies in America are doing well, chances are a lot of the other companies are doing well also. And then the final thing that we covered was a bull market versus a bear market. And a bull market is when the market is trending up. Bear market is when it's going down. And if you ever want to look at the Dow Jones Industrial Average, all you have to do is just type DJIA on the internet, Google, and just bring it right up for the day. Or if you look at historical data as well. And there are other areas that you can go to look at particular companies and so forth. And that's going to be another video at a later time if people are interested, where it's going to be where we fully understand the stock market, who the key players are, how do they evaluate companies, how do they value them, what kind of analysis they do, and how you can actually invest or participate in these publicly traded companies.
So here is my question.
Okay.
Are you going to invest in stock market?
I'll answer that in the next video.
Yeah, in one of the videos.
But it's something you have to take very seriously, because a lot of people lose a lot of money on the stock market. And there's a lot of uncertainty right now. But I think after I outlined the key players and also why the market moves up and down, I think people will have a greater understanding on evaluating whether they should go in the market or not.
Yeah, personally for me, it has never been like something that I look into, but I'm starting to see a lot of people are getting into it. For me, I like real estate. That's the investment that I really like, because I can always go and see it. Also, I'm the one that has control over. Like, if I want to stop, if I want to increase, I can. But with the stock market, I don't have control over it. I mean, it's just like trusting that, okay, having faith, like, okay, I hope this is going to work. So, I don't know.
But we'll see if you change your mind in a couple more videos. But we'll definitely there's a lot of things to learn about the stock market, and I'll try to do my best to explain at least many of those things. Okay, sounds great. I hope you guys, this video was very informative to you guys. It was big terms. I learned a lot of new things here, and this is the man that's going to be teaching us more about the stock market, finance, and all that stuff. Because he's my leader. I only follow. So, yeah. All right.
Don't forget to subscribe. Tell them what to do.
Yeah, subscribe, like, and God willing, hopefully we'll see you on another video.
Yes, God willing. Thank you guys. Bye bye.